it's a brand new week right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning coming to you live from Channels HQ. Thank you for sharing your morning with us. Let's kick off with some news now. Definitely a packed weekend. Let's kick off with the oil market. Now, we see oil prices slipped today with Brent falling towards $80 a barrel as investors wait till the OPEC Plus meeting later this week for an agreement to curb supplies into 2024. Brent crude futures fell 39 cents, about 0.5% to $80.19 a barrel, while US WTI crude, that was at $75.10 a barrel, down about 44 cents, about 0.6%. Both contracts rose slightly last week. The first weekly gain in 5, underpinned by expectations that Saudi Arabia and Russia could roll over voluntary supply cuts into early 2024, and OPEC Plus might discuss plans to reduce further. We'll keep tracking those markets. Now, we'll see in the grain market, though, we see Chicago soybeans fell to more than a 3-week low today as rain in parts of Brazil, that's the oilseed producing areas, eased crop concerns, even as leading consultants reduced their output forecasts. Wheat firmed, recouping some of last session's losses, while corn was largely unchanged. The most active soybean contract on the Chicago Board of Trade, SV1, lost 0.4% to $13.26 a bushel after sliding to its lowest since November 2nd at $13.24 a bushel early in the session. Wheat WV1 rose 0.5% to $5.80 a bushel, while corn CV1 gained 0.1% to $4.63 for half a bushel. Well, today we're going to be drilling down on all the central bank governor had to say on Friday. We'll see Cardoso has presented an economic roadmap and policy direction, which is aimed at steering the country on the path to recovery. The CBN Governor, who addressed bankers and stakeholders at the 58th annual dinner at the Chartered Institute of Bankers, gave some insights on the economic and financial markets development during the year, as well as economic expectations for the coming year. Take a listen.
The Central Bank of Nigeria is committed to achieving monetary and price stability. This is not just a technical objective, but it has real-life implications for the well-being of all our citizens. Through targeted policies, transparent market operations, and coordination between monetary and fiscal authorities, we can ensure a more stable exchange rate, control inflation, and create an enabling environment for businesses and individuals to thrive. That is what I, together with my team at the Central Bank, have been focused on doing in the past 2 months. We have critically reviewed the effectiveness of the central bank's monetary policy tools and have spent time fixing the transmission mechanism to ensure the decisions of NPC meetings actually result in desired objectives. For quite some time, there has been a dislocation of our monetary transmission mechanisms, rendering the NPC meetings largely ineffective. For the avoidance of doubt, the Central Bank of Nigeria Act 2007 requires that the meeting of the Monetary Policy Committee of the bank holds at least 4 times a year, and the bank has satisfied this requirement for 2023.
That was a highly anticipated address by the central bank governor on Friday. That was a summary. Definitely much more, was said that day. Joining us for analysis now is Mr. Paul Olaje, senior economist, SPN Professionals, joining us right here in the studio. Great to have you on the show. Good morning.
Good morning, and thank you so much for having me.
So definitely the governor had a lot, to talk about. He did joke, about spending 5 minutes less with his speech, and I saw the audience actually cracked up at that. But he did definitely have a lot to say. I want to get your key takeaways and also what was not said.
Well, Mr. Cardoso understands that the city occupies is really very sensitive, and it's one of the major drivers of the economy. And I think he has decided to now take the driver's seat. You remember that I spoke with you, I think, last week regarding the meeting that did not hold. We were expecting that the committee would meet. If it is to hold the rate, we would know that, yes, there is certainty. Now, what seems to be a concern of many of us who are economic watchers and active participants in the economy is the silence, which, of course, was not becoming golden. He has spoken, and it's as though our assumption was that rate was held, and he was able to say that. He also said something to what appears to be his vision, and I think by extension the vision of Mr. President, $1 trillion economy. That's an important step we must take. I've now noticed that he's taking steps towards achieving it. So unlike what we've seen with the previous central bankers or the Apex Bank lead, where they just make visions, they write paper, they make presentation, but there are no active steps to making these actualize or making these a reality. Cardoso seems to have taken a different step by saying, yes, this is where I put my mouth, I want to put my money on it such that I can achieve that which I want to achieve. Again, he has also presented himself as somebody who is, I want to assume he may not talk as much as many people may expect him to. But in all of those, when it comes to monetary policy, there is a time to speak, there is a time to be silent. And I hope that when the time to speak comes, it will speak and speak to the issues and also make policy to speak to the issues, right, to solve the key problems that we're expecting as a nation. Right.
Definitely. And he did harp a lot about inflation. He talked about this inflation targeting, framework. And definitely, most central bankers have targets, for inflation. I believe our target is around
between 6 to 9%.
6 to 9%, and we know in the US they're about 3%, at this time. So, talk to us about this inflation targeting framework.
Well, for me, I think Nigerian inflation targeting framework, it will go beyond what monetary we do. Fantastic idea he tried to roll out there, but I must tell you that I have a lot of doubts, like I've always said, if this targeting will work, if we don't have that convergence. When you look at the real driver of this inflation, it's food inflation. And central bank before now, we do money to the farmers in the name of anchor borrowers program, among other things that the central bank have tried to do to ensure that there is that reduction in the level of food scarcity we have seen in the economy. This central bank is taking a detour to that. Is not going to make that kind of monies available to farmers, quote unquote, directly through a transfer payment of some sorts to the farmers. That is not what we are going to see. So how exactly are we going to reduce inflation? I've seen what Mr. Cardoso have adopted as policies since he came to office, open market operation. He's been selling bills and bonds, in the market such that it can mop up excess liquidity. That was the way Governor Emefiele started, selling bills and bonds, mopping up excess liquidity, raising interest rates. When that happens, watch out what the Bureau of Statistics will publish if they are not using their 1 hour, which of course, I've made my opinion known that for African and for developing countries generally, the level of poverty, hunger and deprivation, the quality of money in those countries, it is not right to use an hour a week to measure employability. The minimum that should be used is 20 hours. And the National Bureau of Statistics agree completely. They said we are giving it as an option. There is an hour, there is 20 hours, there is 40 hours. Use the one that suits in the circumstances. But because they work with some international partners, it's possible for them to publish an hour, to publish, just to play the devil's advocate, that there are no disparities. But all of those data are there. All of those data, they are there. Now, here is the issue. If we are using inflation targeting that does not resolve the real issue, we find ourselves in a place where any global economic quagmire, we have effect on us, and that is why we landed here. We have witnessed COVID, we have witnessed Russia-Ukraine war, we have reached fluctuation in global oil prices, and all of these things are having effect on us. You know, the economy appears to me as a toddler. Wherever they kick, it goes, and anytime anyone dangles anything before the economy, it runs there. It's tackled me as a lot of inflation at over 27%, as against what the central bank is targeting at 30%. Of that number is actually what we are targeting as a nation. So, but we've not been able, we are now seeing more than ×3 of our inflation target. So, Mr. Cardoso, we need to do beyond that. It would need to work with trade authority. What many business people, many economists seems not to talk about, even government, when it comes to key macroeconomic variables, is the role of trade authority. And in Nigeria, the way we have done appointments, I think since 1990 to date, is to have someone just manage Ministry of Trade and Investment. But what is the target for trade and investment? By how much has our exports increased? By how much are we also helped with import substitution? These are issues and these are things that we must do as a people so that we can reduce pressure on the central bank, because when central bank wants to say it wants to fight inflation, that did not cause, and the money, excess money supply is not the real reason why we are having this issue. It's like carrying the load of the whole world on one leg, meanwhile the leg should be 3.
Right. All right, let's talk about the other big one now. That's gone, that's over with this leadership. Talk to us about the benefits, you know, from the previous leadership, from the previous interventions, you know, that we saw in the agri sector, manufacturing, you know, all of that, and tell us if it should actually be stopped.
Well, I must say, as a practitioner, of course, in one of the areas where government intervened, even though I did not apply, because I want to maintain a clean record deliberately, I did not apply for any of government for, name it, Hanko Borrower's program, COVID fund. I did not apply for anyone, so I didn't get. So, and I'm not saying people did not get. I just don't want to be involved in it. But when you look at it, the intention of government under President Buhari and the former central bank governor was very clear. The intention was to help people, was to help farmers, is to use the third hand, which of course is now visible because you have invisible forces, demand and supply. So use the third hand, which of course is the government hand, to induce something to happen in terms of supply, such that the demand eventually will be tamed, which may lead to reduction in inflation and all of those. But what actually happened? Corruption. The biggest elephant in the room in our country, as we have known it, and I can say since the late 70s to date, which of course became entrenched in 1985, which is corruption. It became perhaps an identity of some sort. So government says it was going to support from wheat to rice to so many things. The question is today, with all the humongous amounts, billions of naira, millions of dollars that was provided by the government as support in different sectors, do we have scarcity or not? Does it mean that the monies that were given, they were not properly invested? That's the answer, by the way, because when you do proper investigation, you see that some of those money have been diverted into real estate. You see that some of those money were not properly integrated into the system.
And I heard one time that some of the farmers married new wives.
Of course,
with most of those funds. I don't know how true that is.
No. The information is out there.
Right.
And when you go to what the farmers have done, you see that not just the farmer, there are corporate farmers. You know, we are talking of that one affected rural farmers.
Right. I'm
even talking about corporate farmers, farmers in time farm who use their 5 kilometers but made fantastic presentation, but went away with some of the money. And perhaps that is why the central bank is coming up with this. But you see, for every economic decision, I wish this were to be a snooker balls. You know, you hit the white ball when you are breaking, and it can pulse the red, it can pour the other color, but pray that it does not port the black ball.
Right.
Unfortunately, when we make this policy, we need to be watchful. What is it porting? if you further raise inflation, if food inflation will further increase, because some of the life support we have now is because of those parts of the money that were actually invested. So government must come up with an alternative policy, either on the fiscal side or on the trade side, such that as central bank is saying, I am not supporting anymore, what will happen? Are we going to now open our borders for influx of food and little gains we made over the years? We are not going to throw that away, because if you do that, then you can watch what will happen to your exchange rate. It's going to be completely in shambles. I said when I was speaking with your colleague in Abuja that by March you might see exchange rate go to about 1,500, and as at that time it was 700. Today, what is the figure saying? I am not saying that I want it to be. I am not happy anytime I see an increase either at the parallel at official rate, that exchange rate is getting devalued, because my life, our economy, your economy, my economy, those watching us now, those are watching future, if you are in Nigeria or you earn in Naira, your economy, don't let anybody deceive you.
It's a nightmare.
It's a nightmare.
Yeah.
It's getting devalued. Anybody that come to say that it's a right thing for us to devalue does not like us. You cannot be working for 200, 500,000 and the worth of that money changes to 100,000, and somebody say you. Economics says it's a lie. This
those that are making dollars, because some of them, you know, they rest on that.
Yes. If I have time, I will speak to those.
You're earning dollars, so it's all good for you.
Yeah.
No. At the end of the day,
it's not. I will speak to that if I have time. So, but let me say this: if you want to destroy people, this is where economists stand. Economic philosophy. If you want to destroy people, the first thing you do is to destroy their currency.
Right.
Once you destroy their currency, it's a matter of time it will catch up with them. This is why we need to do everything possible to boost the power of Naira, either physically or using monetary tool, or most importantly, coming from the trade angle. So for those who are speculating that, don't worry, once they earn their income or they have any business, they quickly change to dollar and wait for Naira to devalue. This is the foolishness in it. By the time you go back to the market, the price of things you bought before would have also increased. So why can't we work together with whosoever in office to ensure that we boost the soul of that currency called Naira? But that will not come without we producing, without we manufacturing. In fact, a conference I think was just concluded in East Africa, and what many leaders of East Africa concluded on is that the real problem of Africa, especially East Africa, is not because they don't have fantastic foreign policy or they don't even have domestic policy. Their number one economic problem is in production. Is the reason, is part of the reason why you see insecurity spread all over Africa, because they said an idle hand is the devil's workshop. And the last time, if you have ever checked the devil's workshop, what he has there is not pen or paper, it's not suit or tie. What he has is machete, grenades, and anything that can destroy.
Terrible weapons.
So terrible weapons is what he has. But I'm hopeful that our economy will move from such that is currently on to one that we can boost and we cannot be proud of.
So much to unpack there, Mr. Olaje. But thank you so much for your perspective. Mr. Paul Olaje, senior economist, SPM professionals. Always great having you on the show.
Thank you so much for having me.
Thank you. All right, we'll take a quick break now. When we get back, we'll get a sense of what to expect as CBN Governor hints at bank recapitalization in Nigeria. That's our next conversation. Do stay with us. And staying on the policy direction speech by the Central Bank Governor, join us now as Abiodun Keikpe, Managing Director, AfriInvest Consulting. Join us via Zoom. Great to have you on the show. Good morning.
Good morning, Ladi. Good morning. Thank you for having me here.
Thank you for coming on. So we see the Central Bank Governor talked a lot about the banking industry right here in Nigeria. Talk to us about the pros and cons of recapitalizing the Nigerian banking sector and possible risks to that.
Okay, good question. Maybe let's just take a step back and quickly, tap on the buttons, where we're coming from and how did we get here, basically. This is not the first time AfriInvest is making a call for the banking sector to be recapitalized. In our 2022 banking sector report, we had actually made that call, very bold call. And that's coming from, when we look at the numbers from 2005, when the industry was last recapitalized. That exercise then put the recapitalization or capitalization requirement for the banks. There are three buckets. There is the regional, there is the national, and there is the international banking license in terms of the licensing bucket for the banking industry. It put the capitalization number then at 10 billion, 25 billion, and 50 billion respectively. But if you look at how the dollar, our foreign exchange basically has evolved between 2005 and now, Nigeria has had many episodes of the Naira devaluation, right? And if you dollarize that capitalization number for the banks, that means the capital for banks are quite more smaller than we had it in 2005, right? If you translate that 10 to 25 and 50 billion capitalization number to dollar using a rate in 2005, 129 naira 35 kobo to the dollar in 2005, you have 77.5 million, 193.8 million, and $387.6 million in terms of dollar capitalization number for the banks across the different licensing bucket. Now, if you put that in today's dollar terms, clearly it's going to show you how much more in terms of capital injection the bank needs. So we think on our computation to just dollarize the capital numbers for the banks from 2005 level, using today's exchange rate, we would need the banks to inject as much as 23.3 billion, 58.2 billion, and 100.6 billion respectively across their different licensing buckets. Now, the upside to this is that the banks become globally more competitive, right? What that means is if you look at Nigerian banks vis-a-vis other global peers across emerging markets, developing economies, across the advanced economies, even across BRICS, right? It shows you that Nigerian banks gradually can become more competitive and have the capacity to take on additional lending, create risk assets, manage their risk better. Right, that is the upside. Now, there's really no downside. The downside is just that there will be that competition locally for banks to raise capital. You would expect most of the big names that you know to come to the market to begin to raise capital. Already, we've seen a bank such as Fidelity, and I think the FBNH, that's First Bank, talk about the need to commence a rights issue program. Now, if you look at the shareholders funds for these banks, just looking at emerging markets and developing economies alone, as of 2022 in dollar terms, right? For the first, in Nigeria, we have this classification we call FUGAs. That's the First Bank, UBA, GTB, Access, and Zenith, right? Those 5 banks on average has about 3 billion in shareholders fund. Now, if you compare that with South Africa, just looking at Standard Bank Group and the first round average of about 11.2 billion in shareholders, $11.2 billion in shareholders funds, compared to 2.3 billion for Nigerian banks, the first 5 biggest banks I called. That you have in terms of capitalization and the ability of these banks to take on large ticket transactions, whether domestically
all
or
right, Mr.
globally.
All right, so definitely this is gonna, because yesterday I saw some, chatter already, about some banks already talking about, mergers, some already looking at acquiring, smaller banks. What are you seeing, going forward with this when this is actually officially, announced?
Yeah, what we see is would expect these banks to come to the market. There is no two way about it. They're going to come to market to raise capital. Question is what sort of capital are they going to be looking at? A combination equity, debt, equity alone, or debt alone? I mean, clearly it has to be in the minimum, best case scenario, equity capital raise. In a little bit much more base case scenario, a combination of equity and debt. Right. So that is the picture we're seeing, and this is more compelling if you're listening to what the CBN Governor said, that for a $1 trillion economy that we are aiming at in a few years' time, we need to have a banking system that is strong enough to bank such an economy. So, which then buttresses the point about the need for this recapitalization exercise to happen. So, speaking to your question, right, would expect these banks to come into the market to begin to raise capital, either through we expect to see a lot of rights issues taking place where that does not provide a window for them to raise the amount of capital needed. Then they might be looking at some sort of public offerings, which also can augment whatever capital they can raise, or a combination of both, and then the debt capital also.
Right, definitely a lot to look out for. We're definitely waiting for that official announcement and how the banks actually manage all of this. Thank you so much for coming on the show, Mr. Abedu Kekwe, Managing Director, Afrinvest Consulting. Thank you so much.
Thank you for having me.
All right, we see Stanbic IBTC Holdings has hosted the 9th annual Together for a Limb Walk, its flagship corporate social investment initiative supporting children with limb loss. The charity walk is Stanbic IBTC's commitment to raising awareness about supporting children living with limb loss. Take a listen.
Wellness in motion is the tagline. The walk kicks off early in the morning at the Stanbic IBTC head office in Walter Carrington, Victoria Island, Lagos. Expected to terminate at Law School bus stop, Zumbambadiri. It's a friendly weather and an exciting time for these participants who are walking to build hope for children with limb loss. After hitting the 400-meter mark, they returned to the bank's head office for the second phase of the event.
Together for a limb. If you love Stanbic IBTC, make some noise. We will provide continuous support. I'm talking about continuous support. So it's not just to give out an item, including prosthetic limb replacement, until our esteemed beneficiaries reach the very age of 18. Thank you very much and congratulations to you.
Together for a Limb looks out for children with limb losses from congenital issues or birth defects, accidents or mismanaged injuries. An initiative already attracting local and global communities.
As we celebrate this remarkable collaboration between Nigerian healthcare, powered by Stanbic IBTC, and German technology, let us continue to work together to explore new avenues for a future filled with innovation, compassion, and shared prosperity.
Altogether, the initiative has transformed the lives of 100 children.
It's really a thing of joy to see these children who are empowered. They give us hope. They empower us to do even more, and their determination to be the best also drives us to keep doing the best.
What is most exciting is that we keep these children in school. So we give them an educational trust valued at 1.5 million per child until they are 18. So as long as they want to get into university, we're there to keep them in school.
Stanbic IBTC's management says the initiative is the bank's commitment to creating value through social, economic and environmental initiatives, which will continue to contribute significantly to the well-being of Nigerians.
Welcome back. Well, the fintechs were not left out as the central bank governor also spoke about a new framework for payment service policies. Joining us now for analysis is Mr. Babatunde Akinmoses, CEO Sycamore.ng. Join us via Zoom. Great to have you on the show. Good morning.
Good morning. Thanks for having me.
So definitely the governor had a lot to say about payment service banks and the fintechs. Paint a picture of the current framework for payment service banks at this time. He did talk about some going outside their licenses at this time. Tell us more about this.
Yeah, thank you very much. So what the CBN governor said specifically was around the payment service framework generally, right? So there are different licenses. There are the payment service banks, like you mentioned, but there are also the payment service providers. And if you're even looking broadly at fintechs, some fintechs even operate as microfinance banks. So what he's basically saying is, if there is a license for a particular purpose, it should be used for that purpose, because there's been a tendency for people to sort of color around the gray lines or the gray areas, as it were, to undertake services that their licenses do not permit. So not just specifically for the payment service banks, but payment service providers and fintechs in general. And I think that's a very important consideration right now, because we have over 200 fintechs in Nigeria. Perhaps not all of them are specifically regulated by the CBN, and some of them are also regulated by the SEC as well. So the drive now is to make sure that your license is for a particular purpose. That's what you are doing, and you're not going outside what you've been approved for. Yeah, so that's what the governor was saying.
And what are you expecting for regulation now when it comes to fintechs? You see some licenses being revoked and big sanctions coming.
Yeah, that's a possibility. In fact, before the current administration, just on the eve of when the administration was leaving, you will recall that a lot of over 100 microfinance bank licenses were revoked, and one of the reasons that was given, even if it was quite broad, was compliance with some requirements. So if there's going to be a general shakedown for commercial banks, definitely microfinance banks are not going to be left out. Payment services providers are not going to be left out, and we're just going to see more a continuing shake-up of the industry to make sure that there's compliance and everything is in check. I think it's also important to mention that it's going to be all encompassing, right? Like I mentioned before, that not just payment service banks, payment service providers, and fintech players generally that require those licenses to operate.
Right, and with this kind of regulation coming, how do you think Nigerians or customers should interact with these fintechs right now as we await some of these changes when it comes to regulation?
I think the first is, and I like the fact that CBN mentioned that it's not running away from technology. In fact, it wants technology to be at the forefront of the development, right? So it's not a case of staying away from fintechs. It's a case of embracing and making sure that fintechs are compliant with the law. Because what we've seen now is that even the big commercial banks are spinning off fintech arms, right? So from the pronouncement by the CBN governor, I think it's just more vigilance on the part of the consumers to make sure that they are dealing with entities that are compliant with the law, and they are dealing with entities that are also providing the services that are allowed for by their licensing. So we're going to see a lot more technology. We're going to see a lot more encouragement, even from the CBN, for fintechs to embrace more technology, but while being compliant with the law at the same time. Because just as we discussed in the past, this is a sector that's brought direct investment to the country of over $1 billion in the last just 2 or 3 years, right? So it's important that we keep the sector thriving, so that we could achieve that $1 trillion economy eventually.
Right. So much to aim for at this time. Well, we hope the fintechs actually do well with compliance going forward. Thank you so much for coming on, Babatunde Akinmoses, CEO, Sycamore.ng. Thank you.
Thank you very much for having me.
Right. So how's the market going to react to all of this? Let's find out now from Will Ibong. She joins us right now. Great to have you, Will.
Good morning, Laddie.
Good morning.
Well, we can't see a reaction yet because, the Cardoso speech that the CBN Governor was in the evening of Friday. So
Right.
we'll wait to see.
I'm waiting to see what happens today.
What happens today.
And I'm going to be looking at the financial services sector.
Yes, the tier 2
What's
banks.
going to happen?
The tier 2 banks are probably going to get a
that.
hit, but we'll see how it works for them. Is it positive? Is it negative? Let's say our investors, assimilate this news, take it in, and probably let's see the sentiments
Right.
today. We're going to be starting off with the Forex market, where it maintained its downtrend, declining for the third straight week. Data from the central bank shows that the gross reserves earnings decreased by $98.78 million to $33.2 billion as of November the 23rd. But let's look at the Forex market trading for last week from the FXDQ exchange. We saw that the FX spot market, it dropped by 12.93%, but total turnover in terms of transactions dropped by 13.37% to $686.96 million. Now, forwards dropped 79.92 million by 79.92% to $1.05 million, even though the central bank governor did say that they paid some backlogs for banks. We're seeing that going forward. We'll see how the market will react today. Now, let's look at the NAFEX rate. We're seeing the value, for the NAFEX in terms of the valued exchange between the dollar and the naira dropping again by 0.66% to close at 856 naira 6 kobo against 850 naira 43 kobo that we saw in the previous week. Let's bring in now Uzo Anakebe. He is the FX dealer, Access Bank, to share his insights and to tell us what to expect, especially after the central bank's governor speech on Friday. Good morning, Uzo. It's good to have you on the show.
Thank you, Will. How are you today?
I'm very well, thank you. Now, Uzo, the central bank governor in his speech on Friday pointed out the major challenges facing the country in the FX space. We know that's inadequate foreign exchange supply. We see the depreciation of the exchange rate. In all of this, what do you think the mechanisms that the central bank plans to roll out to ensure transparency, as he says, and clarity in that space?
Yeah, thank you for having me. So in recent times, we've seen the central bank come to make bold statements regarding what's going to happen in the FX market. First, they assured us that there will be new policies in place in this market. And I can tell you from background that the central bank is consulting with all stakeholders with regards to the rules that are going to be guiding this FX market. And just like the governor has said, they are going to be focusing on their core mandate, which is price stability, and they are going to be doing a lot of shakeups in terms of the corporate governance of the central bank. We've seen, like you said, the policy coming in place. We've seen a little more transparency in the market where price discovery is now based on willing buyer, willing seller basis. And we've seen a lot of foreign investors coming in because the governor has assured the populace that they are going to float more automobiles, which is very attractive to foreign investors. In the previous week, we've seen a lot of them come in. However, the decline that you noted that happened last week could be attributed to the fact that there was no OMO auction last week, and that could be the reason why the decline in turnover last week. But with the central bank governor assuring the public that there will be another OMO auction in the near future, we see most of the FPI going to come in this week and in the coming weeks to participate in those OMO auctions, and this would also improve FX liquidity as they will be selling FX in the market to participate in this auction. Also, we have the governor on record saying that there will be more collaboration between the physical arm and the monetary arm. We've not seen so much of that in the previous time, but if this works hand in hand, we'll see a lot of improvement in the market, where we see a policy coordination between not just the central bank but the physical side as the government working together to ensure that they have a one directional approach to the FX challenge facing us. basically, we know that our problem is FX supply. So if on the physical side, we see improvement in oil revenues and exports, this would go a long way in helping the central bank in improving the supply and also raising the accretion to the FX reserve. We have seen the central bank openly consulting banks on their challenges and making sure that there is a wider consultation in terms of policies around this FX market. We see a light at the end of the tunnel in the coming months as regards to our FX problem in the country.
And so how do you see, in terms of the recapitalization, the hint that the central bank governor made, how do you see that affecting banks? Do we expect any shake-up for banking sector anytime soon? Maybe very, very soon.
Well, the central bank has not given a policy directive on how this will happen, but definitely we will see most banks coming to the market for most likely right issues, and then in the case whereby they are not able to meet up with right issues, you will see them floating more shares in the market. But I expect that most of the tier 1 banks will be fine with this policy, but however, they may need to raise a little more capital to support what they have already in place. This, I don't think will be a big challenge because we've seen a positive attitude in the Nigerian stock market towards banking shares, and we know that Nigerian banks are really doing well, so I don't think it will be as difficult as it was in 2006 attracting investors to this sector.
Thank you so much, Uzo Anakebe, FX dealer, Access Bank, for sharing your perspective on Business Morning.
Thank you so much.
And now, over the weekend, we did get that news that Nigerian businessman Aliko Dangote is going to be listing his $20 billion Dangote Refinery on the Nigerian Exchange Limited as the NGX. Quite huge story there. We're following the story. It's a developing story. We want to see how that is going to work out, and we're bringing in Ambrose Omodion, Chief Research Officer, Invest Data Consulting, to give us his insight and his perspective on what to expect or what the market should expect as Dangote lists. Good morning, Ambrose. It's good to have you on the program.
Thanks for having me.
So Dangote has confirmed that the company has overcome challenges related to crude oil supply and paving the way for the refinery's listing. And this listing is expected to boost investors' confidence. But do you share this opinion, and what growth opportunities do you see Dangote Industries bringing on for the NGX and the greater investment space as a whole?
I believe that well distributed is what every investor will want to abide or work on. For me, in any market of the world, it's free entry and free exit. We have seen recently that most Nigeria companies are listing on the Nigerian Stock Exchange. Seeing a Dangote refinery coming up on board, proposing to come, for me, it's a welcome development, and we need more of this. Also, we're also hearing that NMPC also is coming on board. These are the things we want to do, so we can deepen our market, so our market will not be directed towards a few stocks that are impacting on the index. For me, it's a good one. And don't forget that Dangote has a history in our market. Look at the companies that are listed on the exchange today, that Dangote has a hand on it for has a shares. You can look at the year 2010 when Dangote Cement was listed at around 135 naira. Today, it's around almost 328, what as high as almost 380. For me, a stated value for investor in terms of dividend and also bonuses and capital gain. For me, it's a good one. If coming with value, I tell you, it's not just listing on the exchange. Coming with value is what investors are interested. And we are seeing that value is coming with the refinery. And also, don't forget that recently we have seen also Dangote Group coming together to list a food company, Dangote Food, which is also going to be a plus for the market. These are the things that the market should overcome at this time, because we are seeing the life of GSK leaving the market. Other companies like PZ, Owandu, all of them in the pipeline to the list for the market. For me, this one coming on board is a good one. The investors have a place to play, because the market is having free entry and free exit. The market will become balanced. We need more of entry now. That means the regulator should go out there and educate more Nigerians or more companies also more to come on board, and for us to have more companies on this. For me, it's a good one. But if you look at one thing that's very, very important in our market, this economy we always heard from the CBN Governor. We want a $1 trillion economy, and I tell you, it's not just overnighting. Companies have to be listed, employ Nigerians, and also create wealth for investors, and also empower the life of working there. For me, we need more of this to drive that economy. And also, like I've heard your another speaker on the program, the bank capitalization for me is not a problem for Nigerian economy because the banks have shown strength where they are going and where they are coming from. Don't forget that in 2005 to 2006, when this capitalization happened, we saw the kind of awareness created. But now, market has become transparent. We have seen technology playing a long road, kind of spreading the news of capital market. I believe that this time, most of the banks will find it difficult to raise the money. And for those that are in first-year bank, I believe that they don't have much problem because most of them, their shareholder funds are above trillions. That means they need to do more so that they can do more business. For me, there's no cause for alarm in our market, or rather, government should make policies that will kind of encourage more listing and make the market friendly to drive economic development in Nigeria.
And we hope that the government makes the environment or the business environment very friendly, so we have more listings on the NGX. We do need that to grow that market capitalization. But very quickly, in one word, bullish or bearish for the market close, seeing that we closed positive on Friday?
Yeah, we're seeing market open on a positive note this morning. That trend will sustain, but don't forget that the high cap stock had much influence on their market. But this morning, we're seeing low cap dominating Guinness chart this morning. But let's wait and see. But for me, I expect a mixed market for today.
Okay, thank you so much, Ambrose Omodian, Chief Research Officer, Invest Data Consulting, for sharing those insights. So, Ladi, the market is going to either go positive or negative, but it's going to be mixed. But I'm going to stay in the green.
You stay in the green?
Yeah, I'm wearing the green.
Fantastic.
So
and talking about Dangote Refinery, listing on the exchange, on the NGX, and also NNPC, chatter about that.
NNPC chatter has been a long time coming. When they're coming on board, we just keep watching.
We'll just keep watching. I'm hoping that when they do list, it's not going to be constant full bid, like what we're seeing with Mercure.
Yes, well, hopefully it's not with full bid. I was going to ask my guest that, but I said, let me just wait and see if Dangote comes in with the number of shares that are adequate for investors to actually buy. Supply meets demand.
Right. Thank you so much. We were giving us the details there from the local bourse and the fixed income market. Let's take a look at what's happening with other markets now. See Bitcoin starting off the week quite red. If you look at the color on the screen, it's starting off Monday really, really red there with just a few pockets of green with the king of the meme coins there. That's one of the ones in the green. That's Dogecoin. But we see Bitcoin starting off in the red at 8 a.m. this morning. Looking at Coin 360 telling us the color in the market. Ethereum, though, still holding on that $2,000 psychological level at this time. We're seeing sell-offs with BNB and XRP. Let's look at the sentiment in the market now. We know it's been greed. It's been greed for the investors in this market, and it's still greed at this point. 66 points, not much movement from the 60-point range that we had last week. If we look at the top cryptocurrencies that we tracked this morning, we see at 8 a.m. 0.10% down for Bitcoin, XRP holding on to 60 cents, but down big 1.89%. BNB is not left out from sell-offs this morning. $229 there. That's Binance was on the news last week, and we're still seeing the impact on the coin there. Cardano, 38 cents, 1.77%. And talking about cryptocurrencies, cryptocurrency exchanges, at this time we did know Patricia Exchange got hacked about earlier this year, but now we see the police here saying that they've apprehended some of these suspects. Do take a listen.
Police National Cybercrime Center has arrested one Mr. Wilfred Bones in connection with partial security breach and complex financial fraud. The center has made significant strides in the investigation of a complex financial fraud reported by Partial Technologies Limited. The case involves criminal conspiracy, unauthorized modification of computer systems, network data, and the unlawful diversion of funds amounting to over 200 million naira as contained in a petition to the Office of the Inspector General of Police, and which was eventually referred for proper investigation. Outlining details of the alleged theft, conversion of cryptocurrency wallets, and unauthorized fund diversion from the company's Flutterwave account The petition specifically mentioned some individuals currently at large. However, painstaking efforts of their trade led to the arrest of one Mr. Wilfred Bond.
Right, and we did get that from the Nigerian Police Force social media platform there, talking about those suspects that were nabbed that did perpetrate that crime there on the Patricia Exchange. That hack was all over the place, and definitely investors were not happy with what happened. Next, let's bring in Rume Ofi now. Great to have you, Rume. Good morning. So finally, the hackers, have been caught, at this time. Talk to me, at the end of the day, that means the Patricia Exchange CEO wasn't a thief.
Exactly, Ladi. This is what we want in this industry because, we spoke about it last week, that in crypto, if you come in with the idea of being a fraudulent person, a scammer, or a yahoo, you have yourself embarrassed at the end of the day. All of this vulnerability that happened gave the industry some challenge, gave the industry some concerns because they've been rug pull here and there. They've been challenging the industry, trying to build it with Africans building products. Because out there in the
Right, there we have a freeze there on Rume. Hello, Rume.
Nigerian.
Okay, I lost you for a moment there. I lost you for a moment, but you can continue.
Yeah. So Nigerian companies are.
Damn it! That's so. You see the network not allowing Rume finish off there. But Rume, we can try again. You were frozen again for a moment. Okay, because I can hear Rume there. But let's look at other matters now. So if we look at the market now, see the gainers counter. We see for the gainers counter, Lunsi is topping that counter, up 27.08%. We also see Luna there, Axie Infinity, $7.02, up 11.85%. So we're seeing double-digit gains on the top gainers counter. But let's try again if we can get Rume at this time so he can finish his thought. Rume, are you there? All right, so we'll try and get Rume again. For the top losers counter, Blur, 53 cents. That's down 12.03%. Mina Protocol, 9.24% down this morning, 71 cents. And we see ApeCoin, $1.63. That's down 7.06%. So we're seeing a couple of sell-offs right now with some of the top cryptocurrencies that we track on the top 100 coins on Coin Market Cap. So that's how the market is looking. It's still a greedy market, at this time, even though we're seeing sell-offs to start the week. That's a wrap on the program today. Thank you so much for watching. Don't forget to join us at 1:30 for Business Incorporated. You can also log on to www.channelstv.com for more updates. From me and the team right here in Lagos, it's bye for now.